Well,
Great. Yeah, so we could just kick it off with both of you guys like briefly introducing yourselves and then could get into it.
cool. That sounds good. So thank you guys for having us. Actually, I'm a Columbia alum from my MBA, so it's always nice to re-interact with Alex and the rest of the people on campus who like crypto. 3-4 years ago, I think everyone thought I was crazy talking about this stuff on campus, so this is refreshing. But what I'll do is maybe start with a very quick background on me, and then we can ask Francesco to take it from there, give us a quick background on himself and Superfluid. So I'll kick it off and pass it off to you, Francesco. So yeah, very quickly, I'm Thomas. I'm French, but kind of grew up in between France and the US. Started my career in investment banking before pivoting into equity research in London. And that's actually where I fell into the crypto space. I was covering fintech companies back in 2014, when, to my surprise, our institutional clients started asking us, and this is a direct quote, "What the hell is this Bitcoin thing?" And so fast forward a couple years, and now having been one of the first research houses to kind of write about this space, I realized it was a lot more interesting than my day job and decided to make a move over back to the sector, and notably in the US. I was living in London at the time, and I think the US was, and maybe still is a little bit, albeit nowhere near the same margin, thanks to projects like Superfluid on the other side of the Atlantic, a little more advanced back then. So decided to do my MBA, and this is how I ended up at Columbia, and basically leveraged the platform that the MBA gave me to complement the business side with, basic Python, venture law courses, things like that, and getting active in the crypto ecosystem. And essentially alongside my MBA and after my MBA, joined a company called Consensus, which most of you might know if you're interested in the space. Joined Consensus summer 2017, basically working on corporate strategy for the overall company, which focused on incubation, venture, and consulting in the blockchain space. And also piloted business development for one of our incubated projects called Meridio. In about 2 years that I was there, Consensus went from being 100 to 1,200 people. Meridio went from an idea to one of the first security tokens on the Ethereum mainnet, and a couple clients signed. At which point it kind of felt like a good point to see what the investment side of this space was like. And so for the past 2.5 years, I've joined a VC called Whitestar Capital, which historically was a generalist fund that's done things like Freshly, like Dollar Shave Club, like Tier Mobility, and a bunch of fintech companies, notably. And what excited me with them was kind of twofold. One, we're a global fund, and I think that lends itself really well to this space, right? Where a lot of teams, and Francesco will tell you guys a little bit about how their team is distributed and kind of very multicultural. But I think that lends itself really well to the space. And to me personally, two, we were looking to go from being a generalist fund who kind of only did things like consumer and fintech and mobility to having a real crypto expertise. And so we've gone out and raised a $50 million digital asset fund, which basically invests anywhere from $300K to $1 million in tokens, anywhere from $500K to $4 million in equity and blockchain related companies. And we've made 15 or so investments over the past year in the likes of Superfluid, hence the connection to Francesco, who's kindly taking his Friday evening out in Portugal to be with us. But also in the likes of Ledin, Rally, Alethea, Paraswap, Liquality, Index Co-op, and a number of projects you guys might like. So that was a lot. What I'll do is take a pause and maybe pass off the talking stick to Francesco for him to tell you a little bit about both his personal journey and how that led him to Superfluid, and perhaps most importantly, what is Superfluid.
Yeah, thanks for that, Thomas. Yeah, so I'm one of those people who has a background that doesn't make much sense. If I think that now I'm working in crypto and decentralized finance, and I just raised a venture fund, a venture round from VCs, right? My background doesn't make any sense. Like I studied languages, which has nothing to do with anything, right? But I'd always had an extremely strong interest for tech, and I was always looking at a lot of different things potentially to jump into. And one day I just found out about crypto. Now, when I found out about crypto, I was working in marketing at the time, and just nothing ever felt the same. So I dropped everything I was doing, started working full time in the industry pretty much the next day, and haven't looked back since. And what I found out is that actually the only thing I'm really good at is learning stuff, and that's the only thing that you really need in the crypto space. Everything is there to be learned. It's all about open source code. You can literally go and learn how everything is made on your own, right? And that's something that's obviously not the same in any other industry. So crypto is the first time there's literally a completely open to observe and to learn revolution, right? So that was immediately captivating for me. And I think I spent about 6 months just literally learning and absorbing everything I could, and then started working in a consulting business with the person who is now my co-founder. So he was ex Skype, had a strong tech background doing streaming video, and we started working doing consulting together. We did that for about a year. Then DeFi started to happen. So I don't know if you guys know about DeFi, decentralized finance, the idea of rebuilding financial primitives on decentralized rails, right, on the blockchain. So we started reading about this stuff. We got very excited. The first protocols to come out were MakerDAO, Compound. And what we did was effectively build one of the first derivatives built on MakerDAO and Compound, which was one of the, which were two of the first projects that were out there, right? So the derivative we built was called RDAI, and that was pretty much our first project to go live. And when we built that, effectively went to our first Ethereum conferences and everybody knew us already, right? And that's the magic here. Like, the community is still quite small. You can launch stuff and it will be picked up by anyone, anywhere, right? We were a small group of people in Estonia building this, and we went to a conference in Germany and everybody knew about us, right? And that was just immediately extremely exciting. And really the idea that you can create a product in a few days, because that product was really built very quickly, right? Build that in a few days, put it out there, and people anywhere in the world can use it immediately without, needing to jump through any hoops, is just an amazing feeling. So that would be my first advice for anyone in here. Just try and build something as quickly as you can and put it out there, because, that you might get some attention immediately, right? You don't have to think for years about what to build. You could just build a prototype and it could work immediately. So,
and actually, Francesco, I don't know if I ever told you this, just to jump in here, but I was familiar with RDAI well before you and I met, before MNC
really?
put us in touch. So yeah, I still remember the token economy, and I was like, oh wow, that's really cool. Actually, the idea of splitting the cash flow from the underlying and kind of having that live on native crypto rails. So to your point, it had, I think, more significant reach than even the level of inbound you probably received.
Totally. And the guys at Token Economy are now our investors as well, right? So it was pretty amazing. So to give you guys some context, what you did with RDAI was you put some dollars into our protocol, and it would give you back the same dollars, but in a derivative. Plus, you were able to say, I want all the interest generated by this deposit to go to a different account, right? So what would happen then is that the interest that was generated by the underlying lending protocol would all be streamed to a third-party account. So this was what we built. The main use case for that was donations. So people would, throw a chunk of money in and donate the interest to someone else, and then they could always take the money out anytime. So it was considered a no-loss donation mechanism. And it was pretty interesting, but we immediately realized that the applications weren't so many, and that realistically you don't want to depend too much on interest rates, because interest rates fluctuate. And at the time we were right. Like 6 months later, interest rates were at zero, and it would have been a train wreck. So we immediately started thinking about other things we could apply this tech we built to, and we realized if we're streaming interest using the same technology, we could stream any kind of token, right? Any kind of value. And instead of streaming with a rate that depends on a lending market, we can just let the user define the rate of streaming, right? And that is basically what Superfluid does. So Superfluid is a decentralized finance protocol that allows you to stream money. So as a user, you can define stream, which means defining a recipient and an amount per second that you want to transfer to them. The moment this transaction is confirmed on the blockchain, funds will start trickling out of your account and trickling into the receiver's account over time, without the need for the user to make any other interactions with the system. So it's very much a set it and forget it experience, right? Which is pretty cool, really. It's very similar to when you give someone your credit card details and they can debit you over time, with the very big difference that this is a push payment. So as a user, you're always in control of those funds as they trickle to the counterparty. Now, some of the main use cases where this is currently being used are salaries, subscriptions, and donations. So again, it's basically the crypto native way of making recurring payments. Only rather than being once a week or once a month, they're every second, which is how everything else in DeFi works. So if you look at all the interest rates in DeFi, they're not quarterly or monthly or yearly, they're every second, right? And we thought payments in DeFi should work the same way. And obviously we built this as a protocol, which means we don't control user funds. We don't manage any of this. It's completely decentralized. And at the same time, it's built in a very programmable and modular way, which means anyone can use this primitive to build their own applications. And that's where things start getting really exciting in crypto, and especially in DeFi, because when you build a primitive, it's not so much about the primitive, right? I just gave a talk yesterday at a conference here in Lisbon, and the key thing to understand in crypto is that the main primitive in ERC20 tokens, which were the thing that ignited everything else, is transfer. But nobody's using it for payments, right? It's used in everything else, right? That primitive that's built into the tokens allowed everything else to happen. So adding an extra primitive for us obviously is interesting for the payment angle at the beginning. But what will actually be the final use case is still up to discover, right? We don't know how it will be used down the line, and that's why we decided to build it, in a specific way where we have programmability and we have a lot of creative surface for developers to build on top of.
Yeah, I think that was a great overview, Francesco, and thanks for that. I hope the backstory speaks to some people, and that some folks here, I know Alex, actually you might have, but go to the ETH Global Hackathons and stuff, because that's where a lot of this stuff was born for you guys. But I think I just want to double click on one thing you said, which is it really is kind of the art of the possible with some of what you've built, right? Francesco described use cases like payroll, which makes a lot of sense. The input for payroll, which is our work, happens every minute, every second, but we get paid once a month. That's just been a technical limitation until now. And that is one of the use cases that people have grasped and understood and kind of gotten behind right now. And actually the head of Visa Crypto has been tweeting about what Francesco and team are working on. A number of crypto foundations are paying their employees like this by the second. But really, I think you can imagine a future in which, you park your car and there's some sensor on it and there's a sensor on the parking spot and it's paying for its exact amount of parking in real time, right? And we can get to kind of the fair value of a lot of these services because we have these trustless systems that automate that. So I think we're seeing the first wave of what people use Superfluid for, but I think I'm particularly excited in seeing what comes next. Having said that, would love to kind of click on double click rather on the payroll use case, because I think that's one that people grasp and that's gotten a lot of PR attention lately. Two-part question really. Who are some of the first adopters that you're seeing adopt this second by second payroll solution, right? And what are some of the hurdles for those that aren't doing it? What are your observations there to solve for that?
Yeah, so well, first of all, it's super exciting because they were the OG crypto DeFi protocol, but yeah, the team at MakerDAO are using this, right? So as I mentioned them before, for who doesn't know them, they were the first DeFi project and they're using this for payroll. We're super excited about it. Apart from them, a lot of other DAOs, so it's mostly decentralized autonomous organizations, internet companies, basically. Generally, their workforce is very distributed. They have people all over the place. They're already paying people in stable coins. And if you're paying people in stable coins, realistically, the step to start streaming the funds is not that big. If you're paying people in bank transfers, then obviously there's a few more hoops you have to jump through organizationally to get started. But hurdle-wise, I'd say there's a few things. First of all, crypto, right? So making the jump to crypto is not kind of easy for everyone. If you're in the US, slightly easier because stablecoins are quite easy to use. And I guess you have USD stablecoins. If you're in Europe, the FX is a bit of a problem. Other hurdles are mostly organizational and procedural, right? Like, we're creating innovative technology. We're creating new ways to get paid. Every time I talk to someone and say, hey, you should get paid for every second you work, right? You shouldn't wait until the end of the month, because by waiting until the end of the month, you're giving credit to your employer, right? You're basically working for free with the expectation that they will pay you. But until they pay you, they haven't paid you, right? And you've already worked, right? And if they paid you at the beginning of the month, they would be paying you hoping that you would work afterwards, right? So paying every second really is the only the only good way to pay, the only fair way to pay, right? So from a kind of logical point of view, it's fairly easy to grasp for most people we've spoken to, but then accountants happen, right? And accountants
I
are
had a
just
feeling this would come up.
yeah, like accountants are generally, they like it, don't get me wrong, but they don't want to do the work, right? The process is the problem, right? Changing, like for an accountant to change their process, and they're very kind of process oriented people, right? They like to structure things. They like to know exactly the steps they have to do to make every box tick, right? And then you come around and change what they think about how money works, right? And they are like, no, we're not doing this. So I think there's a lot of things we have to improve on that. We're building some tools internally, but we're also funding teams and helping teams get even more funding who are working on this use case. There's one specific product that we've been looking for someone to build. If there's anyone in here that would like to give it a shot. Which is very simple, actually. The idea is to allow companies to have absolutely no overhead in adopting streaming payments. So the idea would be that a user would go to their company and simply tell them, instead of sending the funds to this bank account, send the funds to this bank account, right? And that bank account belongs to a company which actually is streaming the funds to the employee. So the employee starts getting funds streamed, but for the company, there's no difference, right? And that's the key. That will be the key to adoption, really. Like the moment we can click in that way, the moment it's users that are able to get access to this kind of service without needing their employers and their employers' accountants to get on board, is when we really start, scaling this use case. So I think there's a pretty big opportunity there. And as I mentioned, we're happy to help anyone who wants to get started on tackling this problem.
And that's actually a perfect segue into two things. I was going to make a joke and suggest that everyone here for their next internship or job recommend that their accountant and HR department adopt Superfluid. Seems like that is not the way, so I take that one back. Most importantly, though, you just touch on something that I want to double down on, which is there is now the opportunity to build businesses and new use cases on top of your primitive. And so you kind of just described one. I'd love if you could dive a little bit into Ricochet, because I found that to be a really fascinating use case and thing that's been built by a third party on top of Superfluid that I think could really speak to the folks on the call.
Yeah, sure. So Ricochet is a really, really cool project. They started at a hackathon, which Thomas mentioned before. I think everybody should go to at least one Ethereum hackathon. They're really fun experiences, and you learn so much that even if you don't end up working in the space, it's still worth it. So yeah, they started at a hackathon, and basically what Ricochet does is it allows you to DCA into assets, right? So for who's not aware of the word, DCA means dollar cost average, and it's a very established investment strategy where basically instead of trying to time the market, you simply commit yourself to a certain dollar amount, right? So if in 2015 you told yourself, I'm going to invest $100 a week into Bitcoin, you would probably be pretty happy right now, right? And the idea there is that instead of trying to buy at the right time, which if you're not a professional trader is very hard to do, you simply buy every week. And by buying every week, you'll buy the highs, but you'll also buy all the lows. And the lows are generally longer than the highs, especially in Bitcoin. So it's actually proven that if you DCA into Bitcoin, you're pretty much always in the green because it just goes up, right? So the protocol that they've built at Ricochet basically works with Superfluid in the sense that as a user, the only thing you do is open a stream. So you open a stream of funds to their exchange, and their exchange will take those funds and every half an hour swap them for the asset you want to buy. They have, I think, 14 different markets right now, so you can, trade a bunch of different things. But the key thing is that for the user, it's only one transaction, right? You open a stream once, you start sending dollars every second, and you never have to touch it again. It just keeps going forever until you close that stream. And what they started to do was liquidity mining. So I don't know if you guys are aware of what that means, but basically it's a fairly established growth hack in the crypto space where you issue a token, right? So they issued their governance token, which allows you to make some voting in the system. You can decide how to allocate some of the funds. And to get this token, you have to use the system, right? So by using the application, you get the token. So what happened is people started really using the application, and they would, buy Bitcoin, sell Bitcoin. They would even buy Bitcoin and sell Bitcoin at the same time just to get more of the token. And eventually they realized people really want to buy the token. So they stripped out the asset buying parts, and now they've actually created a streaming ICO. So this is basically a way for you to buy the token over time. So you stream again dollars to them, and they will distribute a fixed amount of their governance token to everyone streaming. And this is, if anybody's if you know what a Dutch auction is, this is the first continuous Dutch auction that I know of. And I think it's really fascinating that they could build that on Superfluid. And in general, it's just a really cool project that they've built. If anybody's interested, I think Thomas dropped the link in the chat. It's a still very early day community. So if you go there, if you go to their Discord, just chat with them, and you can probably make some pushes to their GitHub, get to know the guys, get some RIC tokens, make some votes. It's really cool to just see how that community is evolving and building new features. They're very organic. Like there's no company behind it. There's no there are founders, right? Somebody had to start it, but nowadays there's at least 4 or 5 people I know of who are contributing to it every week. So it's a really one of those really organic crypto communities, and I'm super proud that they were one of the first projects to be built on Superfluid. But as Thomas was saying, there's more projects as well that were built. If we have some very cool projects working on web-based checkouts, so to enable people to accept subscriptions, right, which is a very big use case. We have people working on Web3 Patreon, so you can basically send recurring donations to people who are creating content, and in exchange get access to exclusive content. And now, more recently, we had someone build a way for you to borrow against your future salary. So basically, you can take your salary stream, you redirect it to a lending protocol, you borrow, say, $1,000 against it, and then that loan will repay itself as you receive the stream. And then as soon as the loan is repaid, you get the money back, right? And you can set that to be like 10% of your salary or 20% of your salary. It's completely configurable, completely decentralized, and you always get your salary back. So it's just an amazing thing. And they built it for a hackathon as well, and now they're already raising funds, right? So it's very exciting to see these kinds of things being built. But again, when you build a primitive, things just start bubbling up on top of it, and it's extremely exciting.
Good stuff. Absolutely love that. And we're starting to see in the companies that are pitching us some folks building on top of you guys too, which has been really great to see. I see that Kevin dropped a question in the chat, which actually segues well with my next question. So, I think everyone on this call is at least to some degree closer to being a Web3 power user than what the industry calls a no-coiner. Nevertheless, I think we can all agree that it's still hard to onboard newbies, and therefore kind of user growth, to Kevin's question in the chat, is obviously something that I think everyone in the space is actively thinking about. I'd love to kind of throw in some thoughts and then pass it off to Francesco to touch on some of what he sees as adoption hurdles, notably the ones Kevin mentioned. But Kevin, to your question about kind of gasless transactions, I think first things first, we're finally at a point when the crypto native community, users that know how to interact with MetaMask, know how to send tokens to a bridge for a layer 2, et cetera, is actually big enough to build venture backable companies. And we're seeing that kind of in the gaming space, right? Like play to earn games like Axie and Cometh are not particularly easy to use. Someone like my father can't pick it up and start playing it on his iPad, right? But they're making very healthy levels of revenues that, and per user kind of metrics, and even metrics like daily active users and low churn and things like that rival some of the best titles out there. The same is true of DeFi, right? DeFi protocols have a very captive yet small market, and that's allowed them to kind of generate millions of dollars worth of revenue. So I'd say that's part one. Your question is more around like meta transactions, and yes, meta transactions. So basically being able to enable what feel like gasless transactions to a user are a great growth hack if your product is one that benefits from a wider market. So, one of the best examples of somewhere where this worked very, very well that I can think of, and then I'll pass it off to Francesco for some of his and some of the other hurdles he sees, is So Rare, the fantasy soccer game, right? Because So Rare is catering to more than crypto heads, it's catering to people who might not even own crypto beforehand, right? Who are buying a pack of their favorite players to play their fantasy game on the weekend. And for that, the early versions of the product, and I think still to this day, actually had meta transactions. So for the user, it felt gasless. Now that's great. However, So Rare has to pay for that in that example. And so I think whether or not you want to include that in your customer acquisition cost probably depends as to how crypto native is your target market, in the first 12 to 24 months. And I think also historically, everyone's been trying to rebuild this out of the box, whereas we probably need some standards around relayers and meta transactions as an industry. But with that rant, I'll maybe take a pause, and I'd love to hear from you, Francesco, A, about the specific questions, if you have any more pointed thoughts there, but also B, what are some of the other hurdles beyond the accountants that you mentioned, and beyond your specific use case that you're seeing to onboarding the next billion users in DeFi?
Well, I mean, gas. 100%. Like gas is the main problem, right? So one thing I'd like to say is generally every transaction has a cost, right? Like not only, well, in Ethereum, obviously there's a gas cost, but there's a mental cost as well, right? And there's a mental cost to making an operation, to making a transaction. And every database has costs as well, but we've got so used to the fact that everything we do is free that now we don't realize that there's a cost behind that, right? But it's just hidden from us, but there's always a cost to any operation you do, ever. Any database entry in any centralized service still has a cost to the company doing it. Now, what we can do in crypto is either try and hide that through things like meta transactions, or we can try and educate the users by simply making it so cool they want to learn, which has worked so far. Or of course, try and create protocols that don't have gas fees, right? Which is what, for example, Immutable X has done. I think there's no gas fees to use that. So these are all options on the table. I think realistically, I don't think UX is the reason we haven't onboarded more people. I used to think that in 2018, 2019, that was what everybody was talking about. Like, if it was the bear market, we were trying to onboard people, we were desperate about it. But actually, what was needed to onboard people was just a way for them to make money. Like, people don't come to crypto looking for good UX, they come to crypto wanting to make money. So what onboards people to crypto really is the speculative bubbles. Now, this is obviously not something we're overly proud of, but it's true, right? People came for ICOs, and then they came for DeFi, and then they stayed for NFTs. And I don't know what the next speculative bubble will be, but realistically, that's what will bring people to crypto. Like I was today at an event, I met a rapper, and he's like, "Oh yeah, I'm a rapper." I'm like, "What are you doing here?" "Oh, I flip NFTs." I'm like, "Okay."
How do you find this space? Do you find this level of diverse talents?
And I'm like, well, that's cool. How's your experience been so far? And he's like, well, I had to learn to use MetaMask. My friend taught me how to use it, and I've blown 0.6 ETH, which is about $2,000. But I'm sure I'll make it back. I'm like, okay, good luck. Good luck with that. I'm not so sure he'll make it back. I had never heard of any of the projects he invested in, right? But he's at crypto parties already, right? So I think there's something to say there about how everybody has some sort of gambling streak to them that seems to attract them to these things. At Superfluid, we're more kind of oriented to build stuff. I don't know what will onboard people. We're just trying to build things that are 10x better. I'd say I'd focus on that, but I'm not kidding myself. I don't know if that will be enough, right? Ultimately, people really will only come if they can make money. I do think getting paid earlier is a very big use case, but I think the moment you can get paid earlier, get access to credit, invest in real time, it really has to be 10x better. Like to learn something completely new, there has to be more than just a mild improvement over the status quo. And I think that was one of the reasons crypto didn't really attract many people in the bear market. We had very low yields. the UX was bad, you had transaction costs. Now, of course, you still have transaction costs and they're actually a lot higher, but you have plenty of occasions to make money and do things that will make you money in the future, right? So yeah, I'd say ultimately making money for people is the best way to get them to adopt your tech. And the way we're trying to approach this at Superfluid is making their experience of money better, faster, and cheaper from a mental transaction point of view by reducing the number of times they have to even touch their wallets to get paid.
Thanks. I think that's on point on many topics, and I echo a lot of your thinking here, but no surprise there. I know there was a question from Davide about kind of the payroll specific example. Knowing that we're kind of more than halfway through and we spent a decent bit of time on that, what I propose, if that's fine, is for us to kind of keep running through a couple more topics. And then if we have time at the end, we'll open it up for Q&A and maybe touch on that specific point, or perhaps Francesco can answer async in the chat as well, if he'd like. But yeah, one thing I want to kind of segue into is, kind of the future of work, and notably maybe careers for young folks getting involved in the space, right? I think pretty probably topical for the blockchain at Columbia audience. So I guess first things first is, as someone who's building a network and who's today a centralized company, but catering to a lot of DAOs in terms of customers, right? DAOs like MakerDAO and kind of how they pay their contributors and such. It's obvious that DeFi and the future of work are obviously super linked to DAOs. Could you share how you think about that space? First of all, like at a very high level, what do you think DAOs are good for? Where do they fall short? And what do you think that might mean for the future of work and payment? Is it people work for one DAO? Is it they work for 5 different jobs? And what are some of the new behaviors you're seeing from some folks that are building some of these products and then handing over a portion of the responsibility to their communities?
Yeah, it's a very good question. I think DAOs are definitely the future of a lot of things. I think they're a great way to allow broad participation, which I think is essential in anything that is trying to be that is trying to be a monopoly. That sounds weird, but everybody in crypto, or most people in crypto, are trying to build a monopoly of sorts, right? And the main difference with something like Facebook is that a monopoly in crypto looks very different, right? It looks like something that is broadly participated in, that is governed by a broad community, and that is somehow credibly neutral. And the only way you can actually be credibly neutral is if anybody can become a stakeholder very easily, right? So I think DAOs are very important for that. They're also very useful if you try to create a community, right? The reason they're useful is DAOs are generally governed by tokens, and tokens are a great way to make your early adopters money. So if you create a DAO and you distribute tokens to your early adopters, what you will achieve is effectively those early adopters become owners or co-owners of that community. And as a result, they become your strongest marketing arm, right? They become the people pushing you absolutely everywhere and every time they can to the broader community. And now you see DAOs, like, for example, there's one called Friends with Benefits, which is basically a Discord chats where you talk about stuff, right? They don't have a product whatsoever. It's literally just a Discord group with a token. And that token is now worth, I don't know how many, $1 million in market cap. And effectively, again, it's just a group of people who decided to create an exclusive online country club, right? And people started buying the token to get access. And now it's a massive community with, a lot of, where the early adopters made a lot of money by simply being early to that community. So that's why I was mentioning Ricochet, because they also have a token and you can still be early, right? Being early is very important in these kinds of things. If you go for the funds, if you go for the fun, then you can be late and there's still a lot of fun. I also would suggest to everyone here, if you're a developer or a content creator, or if you think there's any way you could contribute, getting involved in DAOs is very easy. Like, you literally go to their Discord and ask them, hey guys, is there any way I can help? And you'll generally get a token grant. Like, it's that easy. And as a result, people get involved in DAOs, and then they start working in 1 or 2 or 3, or maybe they get hired and start working full time in 1. I think both of those models will coexist. Some people like being way more concentrated and kind of do one thing. And that's me, for example. I have a very when I go to sleep, I'm still thinking about my work, so I can't work for
As
more than
one of your
company.
investors, that makes you sleep better at night.
Yeah, for sure. I couldn't work on 5 projects at a time because my mental space doesn't kind of allow that. But if it does, then there's definitely opportunities to do that. And there's plenty of people who will make PRs to 100 different repositories on GitHub of different DAOs and just kind of participate in all of them. And that's also fine. I think the future of work is more down to the fact that in general, people working will be more empowered than before. So what you see with these DAO communities and generally with crypto is that there's a lot more power to the worker than there is to the company, as compared to, you know, most of the 20th century, which was mostly kind of company oriented, right? So I feel there's a lot of competition for talent, and people are it's extremely easy to start a company in crypto because you don't even have to start a company. You can just start a Discord server, right? Like the barrier to create something is so
you could
low.
start a Discord server, a community, or a product, and then the company comes after. Yeah.
Exactly. So the bar is very low, which means if you're talented, you generally don't stick around too long in a place unless it's incredible and amazing. And obviously all of our guys seem to think that, but I wouldn't be surprised if tomorrow they went out and tried to do something else, because it is very easy in crypto to create new things. We're at the frontier of everything that's possible, right? But I generally suggest everyone just kind of go and hang out in a Discord, find something you like, even our Discord. I mean, I'm not necessarily shilling other people. And you'll find a list of things you can do. You just ask like, how can I contribute? How can I be a part of this? And there's generally a list of things that they want people to do for them, and you can just be a part of that. And if you're early enough, you'll get some upside. If you're not early enough, you're still part of an amazing crypto community, and opportunities will arise from everywhere, right? So I think really crypto is still the land of opportunity, which maybe the US is not anymore. So if you're looking for opportunity and want to start something and want to make a difference, I think crypto is definitely the industry you should work in. I'm probably preaching to the choir here, but still, worth mentioning how excited I am about new people joining the industry.
I think that's a perfect note to maybe close out on, given I know we're running on 2:45, which was the cutoff. Alex, I'll pass it off to you to see if you want to do Q&A or just final remarks from your side. But Francesco, thanks for joining us on a Lisbon Friday night. And I hope after this you get to go back out and meet some more rappers collecting NFTs.
For sure.
Yeah, thanks so much, guys. This is really great. I think like the introduction to kind of Superfluid, what you guys do, but also just giving us this broad overview of the space and also hyping it up, I think is definitely helpful and appreciated. I guess we have a couple more minutes for Q&A if anybody has questions. I mean, one question I have is how do you actually think about incentivizing people to build on top of Superfluid as opposed to just like maybe forking the code, making something on top of it, having their own token? Because if somebody's like purely looking to make money, I feel like that's probably the more profitable thing, at least in the short term.
Well, Superfluid is a fairly hard protocol to run, to be honest. If anybody's out there and wants to fork us, good luck. Nobody's tried yet, so we actually have a bot that scans on Binance Smart Chain to see if anybody's forked us, because that's kind of the fork chain,
Because so that's where it would fork too. Yeah.
Exactly. I mean, it's the fork chain, right? Somebody will do it at some point, and we'll open a bottle of wine and cheer to their demise. So, anyway, what can I say? I think it's a matter of culture. Like the culture we've tried to embed in our community is a very optimistic one, is a very inclusive one. We're always promoting our builders above it. Like that's the main focus of ours, is promoting the builders and helping them and supporting them. And sure, you can go and fork us, but trust me, there's a lot of stuff that's not figured out yet. And it's not the most profitable protocol to fork. Like what we're trying to do is a really hard problem. Like we're trying to change the perception people have of money. We're trying to change the experience people have with money. We're trying to change how a lot of things work. So I think there's way easier things to fork, but I also think the people who get what we're doing, people that kind of look into it and start to understand how, money is we can transcend the normal perception of money, and people who get really excited about the fact that this is completely new, they just want to build on a protocol because there's so many things you can build, right? There's so many different applications, protocols that you can build on top of Superfluid that realistically the base layer is the most boring part. Like myself, I have so many ideas of things I would like to build, but I actually am stuck building the base layer, so I can't do that, right? But there's lending protocols you could build, there's derivatives you could build, there's a whole line of real world applications like cash flow financing that you could build, and these are all projects, these are all products and ideas that you can take to actual market, and they could be 10x better than the Web2 or traditional finance competitor, because streaming money doesn't exist in traditional finance, right? So it's not just a matter of, we can make transactions on the blockchain. Yeah, but I can do that with the bank. Yeah, but you can't stream money with the bank, right? And as a result, you can't do all sorts of things that you can only do using Superfluid. So yeah, we are incentivizing our community by being nice to them and being credibly neutral, supporting them, helping them. And generally what we do is we will often give grants to projects that are promising in our space just to get them to start. We often will help with things like preparing a pitch deck, preparing an MVP, and we also have a pretty long list of investors to present them with. We had 37 people in our last round, which was a 9 million round. And all of those investors are very keen to invest in anyone building on Superfluid. So, any good pitch deck with the Superfluid logo on it is likely to get some attention. But yeah, what can I say? It's very hard to incentivize builders, but so far I'm quite happy with the success we're having, and we seem to attract the right kind of people.
Great. Yeah, thanks so much. I think I could probably wrap now. Thanks again, guys.
Cool. Thank you guys so much. If you have any questions, feel free to reach out. I saw a couple LinkedIn invites popped up as well. So yeah, we look forward to seeing you at some ETH Global Hackathons, I think is where we'll leave it.
Right.
Cool. Cheers, guys. Have a good day. Bye.
Cheers, guys. Have a good day. Thank you for joining, everyone.